Happy Monday, folks. I hope you guys are ready for another jam-packed week in the stock market. I for sure am. Let's just dive right into it. We're going to break down the stock market in this video. We're going to talk about some stocks as well and overall where my head is at. So if you all find value, hit that like button. Feel free to subscribe. And if you want some free money, who doesn't like free money? You could get up to 17 stocks from Moomoo, each up to $2,000 and up to 12 stocks from Webull. Those are all linked down below. And full disclosure, guys, all those links help out the channel. And with that being said, cheers. Let's dive right into the video. So it's about 11:30 a.m. right now on the East Coast, and look at that. All the indexes are in the green. We have the Russell and the S&P and the NASDAQ. They're all up over 0.5%. With the Russell and the NASDAQ, they're each actually up 0.8%, and the Dow's up 0.3%, as we have the VIX down 2.3%. So overall today, guys, markets are up, VIX is coming down, and we are seeing a little bit of a pullback here on the intraday after we've seen, a lot of green thus far to start off the day. We are seeing a bit of a pullback, which is something that we will talk about here in a second. You guys can see, well, I guess we'll talk about it right now. SPY was at 401 about an hour ago, roughly. Now it's at 398.60, so it is down about 0.6% from that intraday high, and we can see clearly a head and shoulders here on the intraday, pretty much playing out completely. And now is when the bulls are going to come in, or potentially come in, and ride this thing back up. Potentially. As you guys can see, we are technically holding a higher low right now on this intraday chart, and we are holding this little uptrend from, the end of the day on Friday. Well, really all day Friday, we were making higher lows, and that continued into the aftermarket Friday, pre-market today, and as of now, we're still holding that higher low. So this is going to be a big spot for the bulls on SPY, right around 398, $400. You guys know that. That's a big level. And the same thing here on Triple Q. We saw a nice run into the close on Friday. Well, maybe not a crazy run into the close on Friday, but a decent little run into the aftermarket as well on Friday, into the pre-market today, and we got all the way up to almost 297 on the intraday high on Triple Q today, and it's down about 0.75%, almost 0.8% from that point, from the intraday high, and as of now, we are holding that higher low on the intraday chart here. So this is going to be a big spot. If Triple Q falls under 293, we're probably going to get some downside, maybe down to about 290, 291-ish. You guys can see that. That's where we held pretty much all of Friday. So keep that in mind. If this trend breaks on Triple Q, we're probably going to fill that gap down to the lows from Friday. Same thing here on SPY. If I pull up SPY, if we fall under that trend line right at about 398, we might fill that gap down to 393, 394, which is the low, was the low from Friday. And if we pull up the 20-day chart, let's take a look at what's going on here. Simply, guys, really what this is a little relief rally. That's all this is right now. And sure, this could turn into a full-on reversal. That's if SPY starts breaking above 405, 400. But it's not there yet. So as of now, it's simply a little relief rally. We're still under the moving average, main moving average here on the 20-day chart, and we're still under 405, which is a big level of resistance, as you guys can see on this chart. And same thing here on Triple Q, right? We're still under the 180 SMA, still technically under a resistance from, last week, which was right around 298, which is also right under the 180 SMA. So this spot right here, guys, coming up is a big level. Big level for the bulls. And it's simply a relief rally right now. That's all it is as of now. And we have to see if we break these levels to the upside for this to be anything more than a relief rally. So what do you guys think? Let me know your thoughts in the comments down below. That's a quick little breakdown of what's going on as of now. And of course, we're going to do a lot more breakdowns. We're going to do a lot more breakdowns throughout the day. So make sure you guys subscribe if you haven't done so already and turn on the notification bell. That, of course, will notify you whenever I do make a video. And guys, these videos on YouTube, they're free. So there's really no reason for you not to subscribe unless you think the content sucks, which I don't think the content sucks, but that's just me. Maybe I'm a little bit biased here, right, guys? Maybe I'm a little bit, just a tad bit biased. So let's dive into these earnings reports, starting off with Fubo, which is down 13% right now, and it's now a $2 stock. I mean, this to me is a penny stock. Technically, it's not in the pennies yet, but anything under $5 in my eyes, and a lot of people define this differently, but anything under $5 in my eyes, guys, is a penny stock. You know, it's a very risky investment. And in this case, Fubo is very risky. And initially, when the earnings came out, it looks like it was up a little bit. It closed at what, $2.30 on Friday. It shot to about $2.60. It was right around $2.50 after these numbers came out. And then the stock ended up cratering from $2.50 to $1.78, which was a drop of 30%, you know, in the span of 30 minutes, pretty much heading into the market open. And now it's down 13%. So they ended up losing money on the quarter, which is not surprising. They lost 76 cents EPS, and revenue beat. But it's not looking good for guidance. We'll talk about that in a second. Revenue in the last quarter came in at $319.31 million, which beat the $285.54 million, so that's good. And for guidance, it's a little bit underwhelming, guys, probably why the stock ended up cratering, right? They see Q1 revenue of $295 to $300 million, and they see full year 23 revenue of $1.195 to $1.22 billion. So that's a little bit. It's not the best, guys. Let's just be honest here. And Q4 North American subscribers were up 29% year over year, and rest of the world subscribers were up 117%. So rest of the world, they're crushing it. North America still doing well, but only up 29% year over year. I think for a growth company, you'd want to see it up a little bit more than that. But I understand, you know, the economy that we're in, all the streaming services, yada, yada, yada. 29% is not that bad, but it could be a lot better in that same breath, right? And Fubo is one of these services, guys, you have to realize a lot of people just sign up and use it for maybe to watch one sporting event, maybe to try it out for a week, and that's me. I'm not going to lie, guys, that's me. I've used Fubo. I've used the free trial about 4 times on like 4 different emails, and I've canceled it. And this is just to watch big sporting events or whatever. And I think the cheapest plan is $80 a month, or maybe I'm mistaking that. Maybe that's not the cheapest plan. One of the plans, though, that I signed up to try out for the sporting events, $80 a month. Not many people are going to be paying that, $80 a month. That's just the reality of the matter, on top of all the other streaming services they're paying for, on top of cable that they're potentially still paying for. And yes, I know Fubo is kind of like a new age cable. There's a lot of channels. You can get different packages, but a lot of the time people just want to watch it for sports, get in and out, free trial, and then cancel it. At least that's what I did. Let me know what you guys did in the comments down below. And if we look at the chart here, guys, we have a head and shoulders clear as day. This is not looking good for the Bulls. If we take a look here, we have the left shoulder. We got the head right there. Boom. We got the the right shoulder right there. This is playing out. There could be more downside. I'm not loving the Fubo chart right now, but I figured let me cover it because they reported earnings this morning. We also have Nflx looking pretty decent right now, guys. We're starting to get some buying pressure here at the trend line on this 4-hour chart. The stock's up 2.5% right now, which is great. And we're noticing, well, it's clearly still holding an uptrend. And we can see we have a big resistance coming up at about, I'd say, 330 to 335. If I zoom in a little bit, that was the high from back in the beginning of December, also from the middle of January. If that does break, we break 335, there could be a lot more upside here on, Nflx. That'd be a big break. That'd also be a move above the moving averages, the resistance from a couple weeks ago, like I said. So Nflx got to get, it's got to get above 335, and that's why my alert's there. If it does, we could end up catching that move. And let's pull up Tesla, guys. Let me show you guys what's going on here on Tesla. This thing keeps on going up. It pulled back a little bit last week. You guys probably remember that, but today it's up another 4.5%. And it looks like it's going to test the neckline of this head and shoulders. That technically is still intact. You guys probably can see this. Left shoulder head. Then we got the right shoulder right here. So technically we're still in this head and shoulders, but we're getting pretty dang close to that neckline. If we break the neckline, which is right around 208, 210, there could be some more upside here on Tesla. So I'm going to set my alert at 210. That's going to be a big spot for the stock. And with that being said, guys, I'm going to wrap it up. If you enjoyed the video, make sure to smash that like button. Make sure to subscribe. And don't forget to get all your free stocks, up to 17 stocks from Moomoo and up to 12 stocks from Webull. And if you guys want to join the Patreon, you can do that as well. I post all my, alerts on there, charts, Discord access, all of that's on Patreon in the bio. I'll see you guys later. Peace out.